Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 2-hour price chart for Apple Incorporated, stock ticker AAPL. Here we can see that the stock is, another mega cap tech stock falling victim to this latest sell-off in stock markets. This has been a broad-based sell-off. It's really been going on for about 2 weeks. It's a little bit of a slow motion sell-off, in my opinion, because it just kind of keeps happening, keeps grinding lower. We just sort of keep seeing these days where there's a fairly significant sell-off and then a little bit of a retracement to the top side, and then new lows that are posted. And we're talking about mega cap stocks here. I mean, we're also talking about Apple, Microsoft, Meta Platforms, Mag 7 stocks here, Nvidia. All these stocks are really heading lower at this point. And it does suggest that none of these price moves are really stock specific. I mean, this is really a generalized price move here that is being seen throughout the S&P 500, throughout the NASDAQ, throughout the Dow. It's very difficult to find a stock here that is performing well in this type of environment. So currently, if we kind of drill in here, we can see some of the damage that has already been done to this chart. So after posting highs of 237.21, this period would have come in during the July 15 trading session. We can see that prices did reverse quite sharply here, relatively quickly. By the 17th, we had already lost the 23.6% Fibonacci retracement of this broader trending move. The low that I'm using to identify and measure this move comes in at 207.11, which would be the low from June 21st. So we can see a strong upward slope here. But then a massive turnaround after we reach these all-time highs. So, most of the selling pressure really was seen during this July 18 trading session. This was a very significant move lower because, as you can see here, if I drill in here, you can see that we broke through not only this 38.2% Fibonacci retracement, which is this orange zone here, but also the 50-period exponential moving average, which is the orange line. This kind of sloping line here. That's just a coincidence that those are both the same color. Those aren't connected to each other, but they did come in this case, in the same region. So the price break here was much more significant. And as you can see, it's a very strong bearish candle. It took a lot of force to send prices through that level. That's a lot of selling pressure. This is a lot of money because this is such an important large cap stock. So, after we did see this downside move here, we really moved right into the 50% retracement of this move, the 50% Fibonacci retracement. And then we did see a bit of a sideways consolidation period, but which is generally considered to be a period of indecision in the market. This generally what this means is that, the market is looking for direction. It's not really clear where things are going. Maybe there needs to be a fundamental catalyst. Maybe a major earnings report is coming out, something like that. None of this was really happening. I think that markets were just kind of settling and sort of consolidating these losses. But then as we saw more broad-based selling pressure throughout the market, we quickly lost this 50% Fibonacci retracement, as well as this purple line here, which is the 100-period exponential moving average. So currently, this is again, a lot of selling pressure is involved here. And then we immediately put pressure on the 618 retracement, 61.8% Fibonacci retracement. As you can see here, I was watching this line, this sort of light green kind of teal line here, as a possible area to be, considering for a support zone here. And as you can see, we're just sort of slowly grinding through here. I mean, we could be developing into another period of sideways consolidation. I mean, possibly this is a turnaround point. It would be a fairly significant price level if we did manage to hold here. The only problem is that we have technically already broken below. We haven't really seen a convincing close below this level, as you can see here. So, it's not, the break here is not as strong as it would be if we did see a daily close below here or something along those lines. But we're starting to already grind through, any potential buy orders that would be parked in this area. So it is a negative sign here. It's possible that we could see a reversal here, but we're probably going to need to see some upward activity in the rest of the market, probably in Microsoft, probably in NVIDIA. We're going to probably need to see some broader optimism in the market as a whole in order to get a sustainable turnaround here. If we do see a clear break below here and possibly a daily close below the 618 retracement, I should just say the number here. The 618 retracement does come in just below 218.40. So this is this is the important level to watch here. We closed here at 218.52. So, we didn't exactly close below this level, but we're very close to doing so. This level is really in danger at this point. So, the next level to watch to the downside would come in at the 78.6% Fibonacci retracement. Currently, this is found at, try to get an exact number here, roughly 213.30. So, this is really the last kind of line in the sand as far as Fibonacci analysis is concerned. But we do have this rising blue line here, which is the 200 period exponential moving average. If this can continue to move higher quickly enough to sort of meet prices as prices decline here, if that does happen, it could be, you would then see a confluence of technical factors. You would see a moving average support zone as well as a Fibonacci support zone. So you absolutely could make the argument at that point that you would be looking at a potential reversal zone, and that could be strengthened by the fact that, as we can see down here, the indicator reading in the relative strength index does appear to be attempting to roll over out of oversold territory. So, there are some things at work here that could support prices. But as far as I'm concerned, this would really need to happen relatively soon. Because if we see any further price breaks here, I think we're going to immediately start, focusing. I think the market is going to immediately start focusing on this 78.6% Fibonacci retracement and this 200 period exponential moving average. So that level to the downside would come in at roughly 213.30. So here's the current market analysis for Apple Incorporated, stock ticker AAPL.